Hi and welcome to Market Conversations. Just want to do a quick video on Alibaba. It is currently down 5%. We did hit a low of 112.06 this morning. The market just opened, and I've been seeing that a lot of people are saying it's down because of the Ukraine situation, the interest rates, but that's not the case. Alibaba has been selling off ever since last year. And let's take a quick look at a 1-year chart. The stock was trading at 260, hit a low of 108. So we are seeing a very strong support right there. If that breaks, it's going to be very ugly. And they do have earnings coming up this week, and it can be very volatile. Look what happened the last earnings. It was trading at 160. This was, let's see, 160, November 17th. It opened up, came back down to 145, and then been selling off since. So I would be very cautious if you're buying call options because we don't know where Alibaba is going to go short term. We all know it is undervalued. That is not the case right now. Let's take a look at some news that came out last night. So Alibaba is trading lower following reports suggesting China asked state firms to check their investments in Jack Ma's Ant Group. According to a Bloomberg report, citing people familiar with the matter, several regulators have asked institutions to review their exposure to Ant Group. State-owned banks and non-bank firms are among those that have been asked to make checks. The firms were reportedly asked to report any findings to the authorities as soon as possible. Earlier this month, China fined Ant-backed MY Bank $3.52 million for violating credit scores rules and transacting with unidentified customers. As you can see, there's always going to be negative news with Alibaba and many other Chinese stocks. So many regulations, so many fines. When will Alibaba go up? No one knows. If they do, they would be well off with Alibaba right now. But I don't think so. I've been hearing people saying to buy Alibaba at 150, at 140, at 130. I would just be very cautious. If you are bullish on Alibaba, just dollar cost average and maybe protect your shares by hedging your portfolio. We are going to have earnings report this week, and it's going to be a very volatile week. We don't know where Alibaba is going to be. We have seen earnings report. Good earnings, it drops. Bad earnings, of course, it's going to drop. So the only way is to hedge your position. And I'll go ahead and show you what I would do. And I'm thinking about doing this because I have a large position in Alibaba with an average cost of 200. It's crazy. I can't believe how low Alibaba has gone. And no one can believe it either. Let's go ahead and take a look at these puts here. So the puts are very expensive, and that is because Alibaba is dropping, selling off today. So what we want to do is buy the 100 strike and sell the 95 strike. We're only going to pay $130 versus $500, but our max profit is capped to $370. I know it's not a lot of money, but if Alibaba continues to drop, your portfolio will thank you because some of this wins, some of this profit will cover the losses. Of course, they're unrealized losses. But wouldn't you want to have some sort of profit in case Alibaba does continue to drop? We just cannot break above 130. Many times it has gone up. Look at this chart. It's very ugly, and it's just been trading in this range of 110 and 130. If we had played this back in, just say January, sell at 130, buy at 110, sell at 130, we'd be well off. But for the long-term investors, what can we do other than just hold on to our shares? We just have to be as patient as possible. Let me know in the comments down below if you are buying this dip and if you're going to buy call options for earnings reports.